Hello, hello, hello. Give me a moment. Sending out the notifications. All right. Good morning, good evening, good afternoon. How's everyone doing? Hello, Jacob. Hello, 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 Ramon. Good morning. Hello, Adam. Hello, Michael. Hello, hello. Great to see everyone here. Great to see everyone here. My weekend was good. My weekend is still halfway. Oh, we're still getting there. It's still early for me. Hello, Pablo. How is everyone's weekend? Do you watch Formula One here and there sometimes? I do. Good morning, Claudio. Good morning. Hello, Hector from Mexico. Love to see it. Love to see it. Hello, hello, hello. Hello, Mary. Hello. How is everyone doing? How is everyone's weekend going so far? For the first time in a very long time, yesterday I was actually had some basketball games. So it was very nice. Enjoyed myself a lot. Very nice. Who's here after Formula One? Nice. Nice. Hello. Hello, The Thrill. Hello, Jimmy. It was a green week. Great to hear, Adam. For me as well, it was a green week. Love to hear it. It was a good week, for the most part. It was a good week. Very interesting week as well, regarding opportunities mostly. What prop firms are you using or getting funded in? Usually what I do is, I don't have children. No, just saw the question there. No, I don't have children. I have 2 dogs, but no children. I'm not ready for that, I believe. But the prop firm I use, I usually don't tend to use a whole lot of prop firms. I get my capital from investors, but what I do like to do is I like to test things on somewhat a live environment. So when something is online. So for example, I take an FTMO account and I test a few things here and there, see if I can pass the challenge, for example. And that's what I've been doing as well for the past few weeks. It's been going nicely. It's been going well. This live will be saved. If you are interested in certain prop firms, we actually added a new prop firm as well. So if you go right here, this is completely free, what I'm about to promote to you. But if you go to pipback.com right here, this again is completely free. Then you see all the offers. This is for futures. We've added Tradeify right there to the new futures prop firms. You get 5% cashback plus a 30% discount right there. And you can also go to CFDs right there. And of course, if you have certain things that you want us to add, if you have certain features or new prop firms, feel free to let us know. You get cashback and you get the highest discounts, essentially saving yourself a whole lot of money right here. So feel free to check that out as well if you're interested in that. I'm married. I'm not married. No. I have a girlfriend, but I'm not married. As far as we know, Trevor, yes. Of course, if you have problems or are experiencing problems with the prop firms that we offer, then please let us know as well, and we can take that into account. But these are reliable prop firms, yes. But no, I'm not married. No. Gold has been unstable. You could argue that. Yeah, for me, gold wasn't that interesting. Hello, Marcus from Argentina. Love to see it. How do you manage health with trading? I think health is quite important to manage. What I mean is just being I think for myself, when I speak for myself, going for a run or playing some basketball, for example, or working out, helps me also clear my mind a little bit, which in turn then also helps me, for example, in trading. So that's how I think it helps. When you have a healthy body, you have a healthy mind oftentimes. So that's how it then in turn also helps for myself in trading. How old am I? I am 23 years old. In September, so in a few months, I was born on 9/11. So I was born on September 11, 2001. That's when I turned 24. Let's see. Can you, it's a good one, Bill. Can you tell us how you spend your profits? Now I'll briefly go over it and what you do with it, like investing into more accounts, investing into yourself, etc., etc. So what I like to do is to get a picture. I rent a house, I rent an apartment, and what I think is important to understand there is most of the money that I make either goes back, for example, also in a business, in, for example, the MMT, improving that, or for example, improving something like a payback right there. It also goes into, for example, investing. So what I like to do is I have stocks, actually. I don't really go over stocks on my channel, but I do plan on going over stocks a whole lot more. Stocks was my first love. I really like trading stocks. I love investing in stocks. It's I don't know, when I think of trading, my passion is with stocks. So that's what I like to do. So for example, I like to take a look at Roblox. In Roblox, I have been, not financial advice. Again, I wouldn't advise investing in anything like this at this moment in time. But I invest in Roblox, for example. I invest in something like Avona right here as well. Or even a Shopify right there as well. That's what I like to do a lot with my profits. So majority of what I make goes into either investing back into companies or investing in stocks, or investing in myself. So for example, a program, I also like to buy courses here and there if I'm going to learn something new. That's what I like to do. All right. How do you get funding from investors? That's a very good question. Now, to be honest, I got very lucky regarding that. So don't think I was out there really publishing myself, because it was even before I was known. So it was even before I was known on social media or anything like that. Now it's a little bit easier when you do have a face behind it, and for example, you show off certain things. People invest or approach you as well, investors. But I got very lucky because it's someone I know, actually. It's someone I know that is very close to me as well. So we were talking about that. I usually don't necessarily talk about my what I do and trading, etc. But we were talking about that, and he was interested. Actually, he was looking to invest. So I was like, at first I declined, actually, which was the funny part. I declined because I didn't want to do it. I didn't want that responsibility on my shoulders. But then afterwards, I thought, I've been essentially praying for times like these where an investor comes to me. So why wouldn't I take it? So eventually I decided to do it. Start off with lower capital, and then slowly start to look to increase that as well. But how you can do it is you can already get very far nowadays as well, for example, with prop firms. So initially, you don't necessarily need to find investors. You can also go for prop firms. Then with the prop firms payouts that you get, if you show off good risk management, we can take that and we can also set you up, for example, with investors. That's also what we're trying to help with in the MMT, for example. Yeah, so the new YouTube, the series is going to be early next week. Going to be early next week, that video, I hope. Oh, 4 on Trustpilot is not necessarily that bad, I would say. ETF platform is not good at all. Just 4 on Trustpilot. 4 on Trustpilot is not bad when you take into account. If it was from a 10, it would be an 8. It's not necessarily that bad. If any other business other than the MMT, payback, I trade for myself as well. Other than that, that's it. MMT, payback, trade for myself. That's it. That's it mainly. Yeah. No, I don't care about SMT. No. All right, what do you think about a strategy of like 3 to 5 trades a month? So I've been talking about this in the MMT actually the past week quite a lot. So you have, for example, let's say you have an aggressive trader who trades, let's say 10 times a month right there. And those 10 times results in a lot of losses, results in quite a few winners, where eventually at the end of the month, they might be +2. And that is the results, the outcome of 10 trades a month right there. But on the other side, let's say you also have a more conservative trader right here. Let's see. You have a conservative trader who, let's say, takes 1 trade a month, but that 1 trade results in a winner, which is also +2 RR right there. So the question from me to you is, okay, well, who would you rather be? Would you be the aggressive trader who takes 10 trades a month that results potentially in a +2 RR, or would you rather be the conservative trader who takes 1 trade a month, and that results also in 2 RR? Now, for myself, I would rather be the conservative trader right there. So 3 to 5 trades a month, that's perfectly fine. And what a lot of people think when they come into trading, they compare it to what a usual full-time job is. So the amount of time you spend into it, the more of the thing you do, the better you are going to be at it, right? That's usually the case. For example, that also works with if you work in marketing, if you work in arguably any profession besides trading. The more time you spend into it, the more time you actually start doing it, the better results you get, if that makes sense. That's not necessarily true in trading. So in trading, oftentimes it is true that less is more. So right here, I would rather be the conservative trader. And the reason being is because with those 10 trades a month, you're going to take a lot of hits. And what I mean by that is that you're also going to lose quite a lot. So every time you lose, you're going to take a certain hit on your psychology. And it's going to take a whole lot more energy, a whole lot more focus, a whole lot more brain points, as I like to call it, compared to the conservative trader, where you have 1 trade a month that is really high probability, and you simply have a +2, the same outcome as the aggressive trader. So what a lot of people also imagine is they might come to me, I get this question quite often, they might come to me and they say, Arjo, my trade frequency is very low. I want to increase my trade frequency. Now, I can understand that somewhat. If it's very low, so you struggle to really find a trade even within a month, then we might want to look at something. But other than that, again, increasing your trade frequency usually happens relatively. So what I mean by that is when you increase your trade frequency, the amount of losses you take also increase. So it's not like increasing your trade frequency only increases the upside, so only increases the winners and not the losses. Unfortunately, that's not how it works. So usually what happens is you increase your trade frequency, you also increase the amount of losses you take. Now, then you could argue, okay, well, is it then even worth it? Because if I take more losses, if I'm going to take more hits on my psychology, then the sooner or later, I will also mess up in my psychology. So for example, you have traders out there that trade, for example, 10 RR. So every trade they take, they, for example, target something like this. Very small stop loss, and they target a 10 RR right there. Now, don't get me wrong, because this can be profitable, 100%. But it's a lot harder to pull off than just a 1 to 2 RR. Why? Because when your RR per trade increases, your win rate usually decreases. So a lower win rate usually means you need to go for a higher RR. Higher win rate, you can go for lower RR. That balances it out. Now, when you have a lower win rate, for example, you win, let's say 15% of the time. So over 100 trade sample size, you win 15 trades right here with a 1 to 10 RR. Now, in theory, that sounds quite nice. You're going to be profitable. It's going to work out. But in reality, if let's say you take the next 10 trades and you know of those next 10 trades, you might have an 8 trading losing streak. So 8 trades of those, you're going to lose before you get the next winner. After those 8 trades, every single one of them is a hit. It's boom, boom, boom. So every single time it's a hit on your psychology, where eventually you're going to think either the 7th or the 8th trade, you might think maybe even before that already, is this working? Am I doing it right? And you're going to start overtrading. You're going to start revenge trading. So the cost of low win rate also is in psychology. That makes sense. It's very important to understand that. because that's really what it comes down to as well. Okay, with that being said, without further ado, let's dive into the forecast right here. And let me get the Forex factory in front of us as well. Let's see, there it is. Let's see what we're dealing with. Again, what is important to understand, I talked about this last week as well, a little bit. The volatility is not as it used to be. And I'm going to make a video on this as well, but the volatility is not like it used to be, where you can just simply go ahead and look at an economic calendar. You can understand, okay, well, for Tuesday, we have red folder news for the US dollar. This is the videos I used to make, right? Okay, for Tuesday, we have JPY news, US dollar news right there, red folder. So that is where most likely the volatility is going to come in. Trump is in presidency, right now, at this moment in time. So what that means is, with the tariffs, with the talks that's been going on, we have a lot more unexpected volatility. So for example, what we saw from the data is that Mondays actually are a lot more volatile than they used to be. So where Mondays used to be very unpredictable, they now become a lot more predictable, which is very interesting to note. Again, this is not necessarily a bad thing. The only thing that is potentially bad is what news helps with. So for example, if you understand, hey, we have red folder news on Tuesday right there, what it helps with, that gives you an idea of when to look at the market, if that makes sense. But that can also be replaced by arguments or by your own window of opportunity, as we call it in the MMT. Window of opportunity is essentially determining for yourself, hey, I'm only going to look at the market from 2 p.m. to 4 p.m., for example. That's when I look at the market. Besides that, I don't do it. And that's going to be your window of opportunity. Now, for example, a lot of people use news as their window of opportunity. So if 9:30 we have news, and that is when I'm going to look at the market. You can again replace that as well with just a window of opportunity. It's not that hard. Now, that unexpected volatility from Trump is not necessarily a bad thing, because again, as traders, we need volatility to trade. So it's actually quite interesting. That's why we see quite a lot of opportunities, which I want to go over a few opportunities that we had in this past week as well, which was quite interesting. Okay, so what we see heading into this week overall, all right, we have some news Tuesday, Wednesday right there. So of course, the appetizer, you could argue, before we get NFP as well later on in the week, which is that Thursday actually right there, because Friday is 4th of July right there for the Americans out there. So already an early happy 4th of July for all the Americans out there. Anyway, the economic calendar right here looks good. I want to slowly slow it down towards the end of the week. So since we have NFP towards the end of the week right there, that's where I'll slowly start taking a step back. So for example, Wednesday to Thursday, I'll slowly start taking a step back. Unless Wednesday is very interesting regarding technical analysis, price action. Monday, Tuesday, Wednesday right there, that's going to be my main goal. Ideally Monday, Tuesday, Wednesday, Thursday, slowly going to take a step back right there. And then Friday, with a bank holiday, with nothing really going on right there, it's not that interesting to me. Okay, perfect. Let's dive into the market. Let's see what we have. Let's go back to the dollar right here. We're first, of course, going to go over the dollar. Then afterwards, we're going to go over the indices, Forex. I need you to understand something. So there's many different traders out there. We have flow traders right here. What I mean with flow traders, you're likely going to be sort of a futures trader, where you're going to be on the lower time frame and looking for opportunities. We also have filtering process traders, as I like to call it, where you're going to mainly look, for example, at a Forex, and more so using as well the higher time frame, etc. I need you to understand this is actually an episode because the clarity module, the new module in the MMT, has started at this moment in time. And the new episode is going to be online today. Now, what we are going to talk about is about the instruments to trade, which instruments you want to focus on. What I like to do is I like to start with the dollar right here, but I need you to understand I'm somewhat of a hybrid filtering process trader. So that means I take a look at the indices, take a look at Forex, take a look at metals. So it's crucial for me to understand what the dollar is doing. If you're, for example, a flow trader and you mainly focus on futures, the indices right there, not that interesting to understand what they are doing. For the indices, if you trade the indices mainly, the dollar is not that interesting to understand. Should have worded that correctly. Now, on top of that, what we're looking at here is a hierarchy. So for example, we go from the most consistent volatility right there with the indices to then Forex, a little bit lower, metals, a little bit lower, and then we have others right there. Next to that, the crosses right here, these shouldn't be what you first refer to when you look to trade. So for example, your eye should first go to, for example, a Forex. Is an EU interesting? Is the dollar interesting right there? Are the metals interesting right there? If those are not interesting, then you can potentially take a look at the crosses. But if you first go to the crosses to then go to an EU, that's the upside down world. The reason why that is because the volatility is different on the crosses. The volatility is a lot lower. So the crosses are a lot more susceptible to uglier price action, to not following through, for example, to more consolidations. That's what you ideally don't want to deal with in your trading. Makes it a little bit tougher. Anyway, let's dive into the dollar right here. So we see right here, and we talked about this low right here quite often. That low, that swing low right there. Now, what we saw initially heading into this week is a potential sweep to continue higher right there. We had the Monday live stream, I believe, where we talked about this swing high because we reached this swing high right there. And when we reached that swing high, the reaction from it was very aggressive, very, very aggressive. Now, initially, we were, I believe, in this candle right there, forming that candle. Initially, that was not that interesting to me. Okay, let's wait a little bit, see what we want to do. If we can now follow through to continue lower right there, then that is interesting. And that is exactly what happened as well, where we run into this daily fair value gap. Again, that daily fair value gap right there, that is something that we can potentially continue higher from. So again, it's an option, right? I need you to understand, all I'm doing in the forecast is refining the different options of what can potentially happen. So this daily fair value gap can potentially continue higher from it. Well, how does it not want to continue from? How do we know that it doesn't want to continue higher from that fair value gap? Two candle rejection. So two candle rejection tells us whether a fair value gap or any PDRA is being disrespected or being respected. So when we have this fair value gap, the first candle we see is not a rejection, is not that respect candle that we talk about. If the first candle is not a respect candle, then what can the second candle do if the fair value gap still wants to hold? So if we still want to continue higher. The second candle can sweep the previous candle low right there to then continue higher still. So this is actually where we get very advanced. We don't necessarily go over this in YouTube. Not a real reason. We mainly go over it in MMT, to be honest. But right here, what is important to understand, because you can get quite advanced with this. So you can see how all these concepts sort of interlink with each other, if that makes sense. So right here, we see that this previous candle low, the previous day low, if we are going to sweep it to continue higher, okay, then we can already start looking on the 1 hour, for example, on that day that we want to run this. So when we start running this right here, this is already interesting to continue lower right there towards the next target right there, towards the next target right there. Because in turn, that daily fair value gap failing right there, what does that turn into? That we sting back below this original low again. We are comfortable below that low. So that means we are now running that low. So that means if we are running this low, we are going to reach further targets towards the downside. So the next target is quite obviously that one. But the next target is also, if we go towards the left right here, we have a fair value area right there, which we are currently rejecting from. Afterwards, we also have that fair value gap, which is still quite far. First, we need to overcome this fair value area right there that we are struggling with. So what can we potentially see? Okay. We know right here, based on the arguments that we have, that we are more likely to be bearish, at least at this moment in time. So what we see is that we have a fair value gap sitting right there. And we also have an overlapping fair value area. In my opinion, it would be absolutely lovely right here if we can trade back into it, sting back into both the fair value gap and the fair value area to then continue lower from it. So I get this question quite often. Arjo, we have this fair value area, we have this fair value gap. What can we actually trade back into to then continue lower or continue higher? Is it just the fair value gap? Is it the fair value area? What do we wait for? It's a great question. Now, in a scenario where the fair value gap and the fair value area are very close to each other. So for example, right here, the fair value gap and the fair value area are very close to each other right there. So when we retrace back into the fair value gap, we are going to be very close to the fair value area to then potentially continue lower. When that happens, I don't like that. I don't like that at all. Now, let me tell you why. And the reason why that is because, again, going back to all the different options of what price can potentially do. So, for example, I like to get very clear on what price can do, refining those different options. This is very important. I'm going to mention this very often. I have already been mentioning it very often, but it's very important to understand. Because, for example, when we trade back into just a fair value gap right there, and we try to continue lower, what are we leaving behind? We are leaving behind the option that we can still trade back into the fair value area to then continue lower. So there's still a different option of what can happen, if that makes sense. Either continue lower from the first line of defense or the overlapping defense. So right here, what I would like to see is price leave behind no option. So right here, when we sting back into the fair value area right there, we can't create a deep retracement, because if we now create a deep retracement, we are likely to continue higher, target the last line of defense right there, if that makes sense. So when we don't leave behind any option, any different option of what can happen, that gives me a whole lot more confidence to trade. But the confidence is there because the probability is a lot higher. There's a higher probability that we won't see something like this to then continue lower, if that makes sense. It's important to understand. Happens quite often, something to pay attention to as well. Now, on the contrary, if let's say there was a fair value gap like this right here, and we had a daily fair value gap and we were sitting right here, and we were that close towards the next target, then I would like to see the fair value gap holding right there, because then a retrace back into the fair value area is too far to make right there. It's important difference right there, if that makes sense. So the fair value gap, fair value area right there to continue lower from would be absolutely lovely. If that doesn't hold right there, then again, we take a step back, seeing what we potentially want to do, because if the overlapping defense is failing, then the last line of defense might become the target right there. But if this is holding, give it time right there, give it time. And afterwards, right here, you don't necessarily have to get involved in the first move, because if we start running this low right here, that will give us an area of opportunity right here towards the next target, trading within these PD rays. That will be very interesting if that is potentially going to happen. And that's potentially, of course, going to be seen as well on an EU, on a GU, etc. All right, before we dive into the majors right there for Forex, we are going to go over the indices. I sent out a newsletter. Was it yesterday? I believe it was yesterday, right? That we sent out a newsletter, or I sent out a newsletter. I talked about, and this is something we're going to talk about in the clarity module. Again, this episode is going to be online today for the MMT. And I talked about there are all-time high instruments. So all-time high instruments, the way you can see that is that those are instruments that are susceptible to sooner or later reach a new all-time high. So for example, stocks are very susceptible. The indices right here also very susceptible to reach new all-time highs. Sooner or later, these have just been always reaching new all-time highs. That makes them very easy to trade. That makes them super easy to trade. For example, gold, silver is also instruments like that. JPY pairs for the crosses right here, also instruments, which we're going to talk about a little bit later. But that makes them very easy to trade. So all you want to do, ideally, to remain that high probability state is just simply look for reasons to buy. So this is where I took a live trade as well on NASDAQ. The live trade actually next week, that's going to be on YouTube. Quite interesting. You're going to see my thought process, my psychology thought process, and just essentially the full thought process of taking that trade right there and how I take that trade. Me in that trade as well. So what we see right here is that when we have this resistance, that's that daily fair value gap that we have going against us right there. We see that here we have this rejection high, the two candle rejection high. So currently everything below it, we are respecting that fair value gap, right? When we start running the two candle rejection high, we're now disrespecting this fair value gap. So the way I want you to see that is that when price doesn't have this fair value gap right there anymore, it's not an obstacle anymore. It's going to look for a next obstacle. So the next obstacle is also going to be a PD ray. So for example, right here, you have a next run. It's going to run fast towards this next swing high right there, towards that next swing high. And then fortunately, but also unfortunately, going to run towards an all-time high right there, because trading this move right here higher towards an all-time high, some of the best price action you're ever going to experience in your life. It's absolutely beautiful right there. Now, what we see right here is that we get this run right there towards the next target as well. Then at that moment in time, the only thing to really understand is, okay, are we going to trade back into this fair value gap right there, or are we already going to continue higher? So it's maybe this is my doing as well, but I need you to understand fair value gaps are not that straightforward where you can just simply sit back and wait for a fair value gap to get traded back into to then continue higher. No, you want to do a little bit more. You want to be reactive in that case. So there's different options at this moment in time right here. And we broke this down beautifully, by the way, during the Thursday live session in the MMT as well. So we said right here, okay, at this moment in time, it's not too clear what we are going to do, because we can still stink back into this fair value gap, potentially the fair value area, to then continue higher. Or we might already want to continue higher. So that leaves us with two options. So we need to refine. We need to take away one of the options right there to then see, okay, we can clearly act on that option that is left right there. Okay, so right here, what we see is we can continue higher. We can retrade back into the fair value to continue higher. So which option will we take away? Well, quite straightforward right here. If we are already going to continue higher, we are going to run these highs right here. So we are going to show intention that price already wants to continue higher right there. Then we already want to trade this. So for example, what we saw right here, we get new fair value gaps right there. And those new fair value gaps right there, they are being respected. So we see token rejection holding right there. We see that we are already continuing higher right there. That takes away the option of daily fair value gap. So that right there is not interesting anymore. We don't wait for that. We see price is already likely to trade towards the next target, which was that swing high towards the left. So this right here, beautiful move to capitalize on right there, to continue higher. Again, also going to have a trade on that next week. Okay, so what we see right here afterwards, and by the way, the reason why I'm now looking at NASDAQ, NASDAQ has been the most interesting. Why? Because if we take a look at all the indices right here, you'll notice something. You'll notice that NASDAQ has been the strongest. It's now the closest towards the all-time high. So it's the most likely instrument of the indices right there. That is the first that's going to be reaching an all-time high right there. So it's the strongest. That makes it, if you're going to buy, it's the easiest to trade right there. It has the easiest path to continue higher. So a YM, to me, at this moment in time, not that interesting. A Russell, not that interesting to me. An ES, don't get me wrong, very interesting. So if you are an ES trader right there, there's nothing wrong with trading ES right here. But NASDAQ right there, a little bit higher probability, a little bit easier to trade overall. So what we see at this moment in time is that the bias is, well, I think anyone could guess this bias, right? It's the all-time high. That's going to be the target for next week. That is going to be the main target. Now, we might take a while before we reach that, but that all-time high is going to be reached sooner or later again. So what we see right here is that the only thing we really have to figure out, okay, is what are we actually going to continue higher from? Is it going to be a daily fair value gap right there? Is it going to be already the 4-hour fair value gaps that we see right here? Not too certain. So again, it doesn't really matter that you are not that certain at this moment in time. It matters which parameters you are then going to use. So for example, the same we did right here with this daily fair value gap, right? We're going to do the exact same right now. Okay, can we trade back into this daily fair value gap? Can we create a new fair value gap to continue higher right there? All different options, all different uncertainties that are out there at this moment in time. So we have to take away these options and refine them. Okay. So on the 4-hour, we see that we do have a long wick right here and already respecting this 4-hour fair value gap right there. Okay. So if we already want to continue higher right here, what will it take to continue higher? Well, what is in our way? What is an obstacle that is in our way at this moment in time from not continuing higher? I think that is quite obvious. It is this 1-hour fair value gap right there. That's the resistance. The obstacle is the resistance that we have. So if we, for example, tomorrow, start running this high right there with equities open, we are still above the high, continuing higher. And this right there is already where I want to be involved right there, where I would like to trade towards the all-time high. After we reach the all-time high throughout next week, I want to take a step back. Trading all-time highs, always a little bit more tricky unless you wait for a deep retracement. An example of that is what we're going to go over on CHF-JPY in just a little bit as well. So right here, either we're going to run this high right here, or not, and we might just continue lower, might trade back into daily value, perfectly fine. But if we do run this high, then that right there is what is going to be interesting to continue higher already. That's what I'm going to be paying attention to right here on NASDAQ. After we do reach an all-time high, my eyes are also going to go to different indices that haven't reached the all-time high just yet. So for example, an ES, if an ES is still here, while NASDAQ has already reached an all-time high, then boom, I want to trade ES. And I want to capitalize on these all-time highs right there. So ES is essentially the same thought process as well right there. All right, then we move on. DAX right here, very interesting as well. So DAX also has quite a clear path right now towards an all-time high. What we see is that we have that weekly fair value gap that was an obstacle. It was in our way. It's what we can potentially continue lower from. We see right here, we run the rejection high on the daily time frame, so one time frame below. And what we see right here is that we can now nicely continue higher towards that all-time high right there as well. Very nice, looks good. Okay, understanding that if the dollar is going to continue lower right here, which is going to be at least when I speak for myself, it's going to be my main objective. That's what I want to look at, lower price on the dollar. Then understanding that I want to see higher prices, for example, on an Australian dollar, US dollar. This is also something that we're going to touch on today, actually, in the new clarity module, a new episode for the new module in the MMT. And what we're going to touch on is different strengths and weaknesses in currencies. So for example, what is important to understand, Australian dollar, US dollar hasn't been interesting to us in a very long time. Why? Because Australian dollar and US dollar are both equally as weak or equally as strong, which we can see that results in consolidations where it's not really moving anywhere right there. That means Australian dollar is weak, but US dollar is also weak right there. So there's not a clear difference between the two currencies. When there's not a clear difference, so there's not one currency that is clearly stronger right there, that makes it very difficult for the pair to actually move somewhere. On the contrary, if you take a look at Euro US dollar hasn't been doing that great, but the Euro has been, well, not necessarily that great, but has at least been doing better, outperforming the US dollar. That leads in a clear trend where Euro US dollar is going to continue higher. Of course, that's the basic knowledge of what Forex actually is. But it's quite important because then why would you pick to trade an Australian dollar US dollar? It doesn't mean when the dollar is interesting to continue lower, that doesn't mean that all the majors are then interesting to continue lower or continue higher. No, you still need to apply a filtering process, the same what we did with the indices, to the Forex majors. So we still need to understand, okay, if we are going to buy, which pairs are interesting to buy? If we are going to sell, which pairs are interesting to sell? So an Australian dollar, US dollar is not interesting for neither. It's not interesting to buy, it's not interesting to sell. The currency difference is not enough, if that makes sense. That's important. So what we see, an EU is a lot more interesting. So in EU right here, the only thing that you really want to take into account, we have reached a few targets. So we have reached this weekly fair swing high, sorry. Let me see. Have we reached that? No, we have not reached the weekly fair value gap right there just yet. Those are, and the reason why it's important to understand, whenever we reach a certain target, there's an option, an extra option that has been added to the market. And that extra option is that we can now see a rejection. So again, the more different options there are in the market, the more lower probability or the lower the probability is going to be of your trade. So if there's an option that we can potentially reject at that moment in time, we're not too certain, then that makes a lower probability. So when you're then going to risk your capital on that, your risk is a lot more, if that makes sense. You don't want to necessarily risk it on that. It's quite advanced material, but it's important to understand. Anyway, right here, what we see is that we currently have a two-candle rejection from the swing high right there. We could potentially retrace back into the fair value gap right there as well. Or we could already continue high right there. Again, we want to apply the same thing. So can we already see if price, for example, wants to create a new 1 hour value gap right there, respect it right here. Can we play that last move towards that next target right there? Or if that's not the case and this isn't going to happen, can we just wait? Wait right here for potential consolidation, stink back into fair value gap to then continue higher. That makes sense. Very similar to EU, very similar to EU, yes. GU right here. Also going to be very similar right here. So I need you to understand, we have targets selected right here towards the left, that swing high towards the next swing high. What we can see is when we start running this high, we fully take away that option, right? We fully take away the argument that we are respecting a swing high. So this right here, very similar on EU. This right here is going to be where we run the high right there. That right there is going to be very interesting right here. It's an area of opportunity, what we call it. Now, what we see right here, very similar to an EU. Let's see if we can potentially already continue higher right there. It can be interesting to already look to get involved as well. So look to buy GU right here. Again, once you understand the dollar story, understanding the majors, quite straightforward, if that makes sense. New Zealand dollar, US dollar, you also see it right here. This not that interesting, where GU and EU actually had some opportunities right here towards that target right there in the past week. And EU also had some opportunities right there. New Zealand dollar, US dollar struggled a lot more. Why? Because the currency difference is not enough right there. US dollar, Canadian dollar right here. We'll see something similar. This to me is also not necessarily that interesting. US dollar CHF also is all right, actually. US dollar CHF actually also had a very interesting setup last week right here with a 1 hour value gap right there to continue lower. It was beautiful. Someone in the MMT spotted it. Kiruba, if you're watching this, it was you. Towards the low was a beautiful setup right there. US dollar JPY right here. Not that interesting. Again, you'll notice as well, very similar. US dollar CHF, an EU, an GU, and a US dollar CHF right there. Those would be on my waiting list. So US dollar CHF, also quite interesting to keep continuing lower right there. All right, moving on to gold. Gold right here hasn't been that interesting to me. So I need you to understand something. I saw a lot of people taking a short right here from a bearish daily value gap on gold right there. So we're looking at shorts, and those shorts played out. Don't get me wrong. If that's your trading plan, if that's for you, that is perfectly fine. But in MT, we also talked about this. I need you to understand. There is going to be a point in your trading where you're going to have the experience to understand and also the data to understand what is high probability and what is low probability. So for example, I see now a lot of people that were talking about this trade right here that played out right there, that took that short. Why didn't you take this fair value gap right there? Why didn't you take this fair value gap right there? Why didn't you take a 4 hour value gap right there to continue lower? That's quite important. And what I'm trying to get at right here is because usually people take a trade where there's no, how do I say the problem? There's no process behind it. So there's no guidelines behind it. So it's just somewhat of a random trade that they take, where the probabilities are actually not that much in their favor, if that makes sense. So again, if you are profitable trading like that, perfectly fine. Do your thing. But I need you to understand that this move right here, lower, a lot lower probability instead of continuing high right there. So it's an important distinction to make right there. You can trade it, but understanding that there's more risk attached right there than looking to continue higher right there. It's important. So for myself, for example, I would still like to wait. I'm still waiting. I would still like to wait. I'm not interested in shorts. Trying to short an all-time high instruments, it's a recipe for disaster, to be honest. If you're going to consistently try to short, for example, a NASDAQ, a gold, a silver that is on their way to a new all-time high, it's not going to end very well on the long term, at least. In the short term, on a 1 trade sample size, might be fine. But 2 trade, 3 trades, 4 trades, it's a little bit different. So right here, I simply want to wait for us to still continue higher. So how can that potentially happen? Well, we might create a new daily value gap right there that we can potentially continue lower from again. I talked about this before. Just because you can spot an opportunity does not mean that there is an opportunity, or does not mean you need to take that opportunity, because it does not mean that the probabilities are automatically in your favor. Different opportunities bring different probabilities with it. So right here, when we create this bearish daily value gap right there, it's a little bit higher probability than that previous daily value gap. But for me, I would rather wait for us to overtake that if that happens, to still look to continue higher towards the new all-time high. That's just me. That's what I would like to wait for. Now, on silver right here, that actually is a little bit more interesting at this moment in time. So what we see on silver is that we have this weekly value gap that we have sting back into, which we can potentially continue higher from. We run into this daily value gap right there, which is not necessarily a problem. But right here, if we can run this rejection high right here, that had a sting back into the daily value gap, that is going to be interesting right there. So this right here, for me, is going to be an area of opportunity. Again, you'll notice so far, I have identified for myself multiple areas of opportunities. So multiple areas where I potentially am going to look to trade throughout the week. On silver, that's here. On a GU, that is what we talked about right here. On a NASDAQ, that is what we talked about right here. So there's already multiple areas of opportunities that can potentially trigger. That's what the forecast is about, to identify these areas of opportunities. Because when then those areas of opportunities get traded back into, that's your parameter. That is your parameter that tells you, hey, your area of opportunity is now traded into. Now you're going to take action. It's not like I'm sitting here like, well, I'm not sure. I might trade something a little bit like US dollar CHF, but I'm not certain. No. Throughout this forecast, I've already identified exactly where I want to get involved. And if those parameters get met, I look to trade. If not, I don't do anything. Sit on the sidelines, quite frankly. I couldn't care. I couldn't care less If we do follow through lower from that bearish fair value gap right there, I don't care. But that's not my parameter. That's not my high probability trade setup. That's not where the high probability is. The high probability is, for me, when we start running that high right there. This is going to be interesting because when we run this high, it's, well, I don't want to say guaranteed, but the probabilities are extremely likely that we are also going to reach that high right there. So that right there is going to be very interesting if we do reach that. If we don't, again, I simply don't do anything. All right. So silver right there, to me at this moment in time, a little more interesting than gold. I'll put gold on the waiting list, but I'll just wait. Bitcoin right here, we see that we have this weekly fair value gap right there. We talked about this a little bit on Monday, I believe. We have this rejection low. We sweep the rejection low. So when we sweep the rejection low, that means we can still continue higher. We need to run it for the fair value gap to be fully disrespected, if that makes sense. Once we sweep it, we can still continue higher right there. So this path towards an all-time high, at least at this moment in time, still looks quite good right there to continue higher towards the all-time high. All right. Crude oil, not that interesting to me right here. I would rather wait. Bank Nifty right here is at an all-time high. So that also means I would like to wait. Bank Nifty, again, I get quite a lot of comments. Bank Nifty has a lot of gaps. I personally don't trade Bank Nifty, but there's a lot of people on YouTube as well that do. So Bank Nifty has quite a lot of gaps. Don't worry. The concept that we use work very nicely on Bank Nifty because you have textbook price action. For example, this daily fair value gap right there, we have the rejection high that gets ran. We talked about this on Monday. Once this gets ran right there, we have a very clear path right there to continue higher right now towards the all-time high as well. Very interesting price action. Let's move on to the crosses. So I want to talk about CHF-JPY. CHF-JPY is one of these pairs that has also reached an all-time high right there. So when we reach that all-time high, again, the first thing I want to wait. This is just an all-time high protocol. It's quite straightforward as well. This all-time high protocol is that if we reach that all-time high, I take a step back. And when I take a step back right there is because there's no clear target to work with anymore. So some people like to whip out their Fibonacci tool right here and like to say, well, Arjo, if I drag my Fibonacci right here and I put on some random numbers right there, then we'll see that the next target is likely going to be that golden ratio right there of that Fibonacci. To me, it's the same as, to me, fundamental trading a little bit. Now, of course, it's different, don't get me wrong, but it's too open to interpretation. It's too vague. There's not clear, hard evidence that I can work with, that I can deal with. So there's not clear an argument that I can say we can reach that exact high because that's where the liquidity is. I can't visually clearly see it. To me, it's a random number. Might work on the long term, but again, the same if I draw a line right there, that is also going to turn into resistance and support right there over the long term. So again, a broken clock is twice right a day as well. That's something important to understand. So what I like to wait for is once we reach an all-time high is a deeper retracement. This is perfect. Here we get a deep retracement. Ideally, you get PD rates going against you, so you get new resistance. So for example, we see this 4-hour fair value gap right there. That 4-hour fair value gap right there, perfect. That's exactly what I would like to see because this gives us an objective idea, a lot of clarity on when we can now reach an all-time high. So for example, once we disrespect this fair value gap right there, which we do by running this previous candle high right there, we now have a clear path, boom, towards the all-time high. So this right here is an area of opportunity right there. This is a bit of a shame. I missed this trade. I should have taken this trade. So this trade is perfectly according to my trading plan. I should have taken the trade. I missed it. Was not in the right state of mind at that moment in time. So it's a bit unfortunate, but that's for my journal as well. So right here, we continue higher towards a new all-time high. Perfect. That's exactly what I would like to see right there. Very clear path towards the all-time high right there as well. So when we are currently at an all-time high, essentially, I want to see the same thing. I want to wait. I simply want to wait. For example, on the 1 hour right here, we do get this 1 hour retracement. And we see that fair value going against us. If we now start running this high right there, we see that we have a clear path right now towards the next high right there. That is very interesting. So that's what I would like to wait for. That is my all-time high protocol. Something like a Euro JPY, for example, is also quite interesting. So Euro JPY, we are currently struggling a little bit with the daily fair value gap right there. But if we can overtake that and run this high, this is also very interesting to continue higher right there and keep continuing higher as well. You'll notice CHF JPY was the strongest JPY pair right here. Australian dollar JPY weak, Canadian dollar JPY weak, CHF JPY the strongest. So for buys, this is the most interesting. Afterwards, it's Euro JPY because it's the second strongest. So if CHF JPY at that moment in time has already reached an optimize or reached a target, you remove it from the list. Then the Euro JPY right here becomes more interesting. GBP JPY is the third strongest. Also quite interesting. I prefer Euro JPY at this moment in time. New Zealand dollar JPY quite weak at this moment in time as well. So top three, CHF JPY, Euro JPY, GBP JPY right there. So CHF JPY, my first preference. After that, if that's not interesting, I'm going to look at Euro JPY. Only after that, I'll look at GBP JPY. So the rest of the majors, the rest of the crosses right here, not that interesting. I would not necessarily want to risk capital on this. Main reason being as well is the crosses, again, we go over them last. There's a reason for that, right? Because they are also the least interesting to start with, because the volatility is not in their favor. The volatility is in favor of the majors, of the indices. So automatically the majors, the crosses, the majors, the indices are already more interesting, just automatically from a baseline perspective. So right here, I would rather risk capital on, for example, a CHF JPY. I would even rather risk capital on a silver right there. I would even rather risk capital on an EU, on a NASDAQ, for example, right there. It's a hierarchy. All right, that is the forecast. Let's see. Please don't forget to also do your own forecast. It's a good question, Steph. What is your area of opportunity for EU? So, for example, EU is a little bit tricky. And the reason why it's a little bit tricky, you have an area of opportunity right here to continue higher. So, for example, right there. But we will already very fast reach the next target right there. So, again, then it's also about, okay, well, is the risk going to be worth the reward? And what I mean by that is simple RR. So for example, if I look to trade this right here and the target, my main target is already that close, this is a negative RR, if that makes sense. So that is not that interesting because the risk is not worth the reward anymore. Then I would need to target far beyond the main target right there. But then the risk that we might reject from it to go break even to then reach it, I'm not a big fan of that. So I personally would prefer to take a look actually at GU right there, if that makes sense. All right. I mainly use for my Forex pairs, I use FXCM. So these are different brokers, different data feeds. Every different broker is going to be a little bit different. Now, essentially because the way it works, they somewhat, to sum it up, they make their own price action. So for example, when I like to stick to futures. For example, when it comes to gold right here, when it comes to the indices, especially if you trade a little bit more seriously, I would also advise take a look to simply buy the CME package right there for ES and NASDAQ. And if you, because this is the quote unquote official price action, this is actually what's being traded. If you, for example, go to US 100, you'll see these are all CFDs. So these essentially all make up their own price action. So this price action is going to be, yes, the candles are going to be similar, but the numbers you see right there is going to be completely different, if that makes sense. So I always like to focus on the futures right there as much as I can, because that to me is the real price action, if that makes sense. And for Forex right here, I mostly use FXCM right there. Hello, Mihai. How are you doing? Great to see you again. Great to see you again. Love to see it. I have a question. The area of opportunity is the zone between a rejection swing and the next PD rate. Yeah, correct, Mihai. It's very similar. Now, what you mentioned right there, it's an area of opportunity. Can be a no resistance area. A no resistance area is always going to be an area of opportunity, but an area of opportunity is not necessarily always going to be a no resistance area. So what I mean by that is, for example, when we take a look at, which one was it? I need to remember, silver. So silver right here, this is an area of opportunity, not necessarily a no resistance run, because we do have fair value gaps, but it is very likely once we reach that high right there, run that high, we're also going to reach that high right there. So it's not a no resistance run, but it is an area of opportunity, if that makes sense. So there's a trigger and a target. That's the most important part. Most important. No, my investors are not necessarily all rich guys. No. They're older than me, but not necessarily all rich. It's just a individual, just a person. Just a person that just had money to spare, that wanted to do something with it. How much do you pay attention to what's on the left? The left, what is important to understand. So for example, right here, when we start to continue higher right here, the left for me is only important to get a clear idea of when we can potentially see a rejection. So the way I treat the left, and what I mean by left, everything that's not current order flow is the left. So for example, right here, this is the left right there as well. But on the daily time frame, it's not the left, because on the daily time frame, this is current order flow. So that's where time frame alignments becomes a skill, if that makes sense. Now, when I start looking at the left, it's important to understand that the left for me is mainly resistance. It's not what I expect lower prices from. So for example, this right here at this moment in time is also already the left right there, because we've already disrespected the overlapping defense. So the order flow lag is already failing, if that makes sense. So right here, this is resistance, where yes, we can struggle. It's a bump in the road, but then we can continue higher. So I use it as a target. I use it to determine, okay, are we reaching a target? Can we expect a rejection? For example, that's the way I use the left. So that's the same way I'll use, for example, this Vervalika right there. We might use it as a target right there. We might struggle. It's a bump in the road, but to then continue higher. I don't expect lower prices from it. That makes sense. I always trade from the most recent lag. True, Capello, true. Yeah, I've been using the entry for a long time right now, Tyrus. It is based on again, YouTube always is a little bit behind. So for example, the module, the clarity module, all things we've already gone over in the MT. They know what it's called. I'll call it as well here. It's a stick entry. A stick entry. I've been using it for quite some time right now. I would argue almost a year, but on YouTube I don't really discuss that. So YouTube is always a little bit behind regarding that. But it's essentially a stick entry. So I use expansion phase candles to look for my entries. It's not fair value gaps. Actually quite funny, because I would argue I'm quite known for fair value gaps, but I rarely actually enter using fair value gaps. Funny enough, but I use just candles. So the candles, I use candle signs to candle rejection. The light package can already help you. Yes. For the people that are interested, again, at this moment in time, we have the clarity module going on in the MMT, more specifically in the masterclass. So if that is something you are interested in, you can go to Trading MMT. The way that works is essentially we take concepts, we turn them into very clearly when and where you look for an opportunity, when and where you look to trade. Essentially going over every step in your trading journey as well. So when you're running into a problem, for example, with your trade frequency, with not finding high probability trades, we go over everything, how to overcome it. That's why it's called clarity module in the first place. It's mainly aimed for people as well. Let me clarify that. It's mainly aimed for people, for example, that already have somewhat of a stable income. So for example, think if you already have a full-time job, you want, besides that, you also want to trade, or you want to slowly transition into full-time trading as well. That's what it's mainly aimed at, the masterclass right there. Yeah, it's a good one, Nisha. Very, very good question. So for example, can we also say right here that the 4-hour fair value gap, we can use this rejection high to fill right there to then continue higher? There's a reason why I ignored it and why this is my area of opportunity. It's a very good question, a very good spot. So right here, the reason what is important to understand is that if we do run this high right here, then we are still going to be within the rejection from the daily fair value gap that we have towards the left. So it's important to understand this hierarchy. We have this daily VWAP gap right there. So let's say we start running this high right here. That means we are still respecting the daily VWAP gap. So that means anything below this high right there is more susceptible still to consolidate, to still continue lower, for example, a more unpredictable price action. There's still an option in place, if that makes sense. So this right here, you could argue, this is an early sign. So this is an early sign right here that we are also going to reach that high. But this right here, this move is lower probability than waiting for this move right there. The reason why is because here there's still an argument going against us. So I mainly trade one-sided arguments. One-sided arguments is when we run this high right there, if that makes sense. A good example of this is NASDAQ. So NASDAQ right here, we really start running once we start running this rejection high, this daily VWAP gap. So for example, right here on the 1 hour, we see multiple times below the rejection high that we also, for example, overtake this fair value area. We start running these highs, rejection highs, to continue higher right there. But since we haven't disrespected this fair value gap just yet, right there, we are still below the rejection high. We are more susceptible to consolidation. So this price action, can it be traded? Yes, but it is lower probability than if you were waiting for us to run this rejection high, if that makes sense. It's a really good question. I hope that makes sense. Hello, PO3 from Germany. Hello, hello. Manos, what is important to understand for when you're trading NASDAQ, it is, or ES or any of the indices, in the bottom right here, you'll see adjust for contract changes right there. This one, you want it to be gray, you want it to be on. For example, when I turn it off, you'll see it's at an all-time high. Now, when you adjust for contract changes, you are always trading the most recent contract. You always, as a future trader, want to be trading the most recent contract. The reason why that is because the most recent contract has the real liquidity, has the real volume in it. So all the big hedge funds, for example, they are trading the most recent contract. So they are looking at the same liquidity as we are looking. So for example, why don't we get a large rejection right here at the all-time high right there? Because there is no reason to reject, because this is not actually the all-time high. That's not where the actual liquidity is. The actual liquidity is sitting right there. Right there. That's the actual all-time high right there. So we want to adjust it for contract changes right there. The set doesn't really matter, but the contract changes, that one is quite crucial. Takes many months to pass a challenge with 3-4 trades a month. Not necessarily. Takes a month, even less, takes half a month. If you take 2 trades with a lot of risk, you can pass it. Again, the objective first is to get good at what you're doing. So first, it might take some time. But if you only take 3 or 4 trades a month right there, and you know those are good high probability trades, then why don't you risk more to pass the challenge faster once you understand what you're doing? Now, what I would not advise is when you don't understand your trading plan clearly, when you're not ready for that, to then trade and risk a whole lot to pass the challenge. No, first understand, I clearly have an edge. I can risk, for example, 2% right there to pass my challenge a little bit faster. Then it only needs to realistically take 2 trades to pass it. And then on the live account, you can drop your risk again. So then it takes 2 trades to pass that. When you take 3 or 4 trades a month, that's half a month to pass the challenge. It's not that long. And that's the difference, right? Because then on the contrary, the other belief is, okay, well, if we only have 3 or 4 trades a month, and then instead to pass the challenge faster, I'm going to take more trades. Those more trades are not going to result in more winners. So then the thing is, then the more trades are going to result also in more losses. So then arguably it takes even longer to pass the challenge, if that makes sense. So the logic is flawed right there. Minimal profitable days rules come in. That doesn't matter because you can risk 0.01 loss if you're trading CFD forms, for example, to pass it. So that's not relevant. That's not really that relevant. And if you're a flow trader, if you talk about futures, you're most likely going to trade more than 3 or 4 times a month. No worries, Liquidity Hunter, no worries. Best broker. I have 2 experiences with brokers. I have an experience with interactive brokers and I have an experience with IC markets. From my experience, those are good. Those are reliable, but I would highly advise to also do your own research regarding brokers right there. So interactive brokers is a little bit harder to get into, as in it's not as simple as you just sign up for an account and hey, here you go, trade your capital. IC markets is a little more accessible, more so CFDs focus as well. But both, in my opinion, are good for different purposes. Hello, trading patiently. So, haven't seen you in a while, my friend. Haven't seen you in a while. Hope you're doing good as well. I'm doing good. Thank you, thank you, thank you. Hope you've been doing good. Great to see you again, my friend. Great to see you. What we have in Zero to Hero module. Yeah, I believe as Burn, great to see you as well. Zero to Hero module also said it was amazing. Thank you. But Zero to Hero module is essentially the most recent. It was 2024, I believe. Or no, it was 2024. It's the most recent large module. The most recent large module that we now have is the Clarity module, which we are currently doing. The Zero to Hero module was the previous one. It's also things where we go over a lot of token rejection, things like that. Things, for example, stick entries also that we don't really touch on YouTube, etc. So it was the most recent large module where we essentially take you from also A to Z. Is it okay to focus only on one pair? Good question, Mark. That's all right for me. I don't really mind it. For example, but there is a difference, for example, between EU, GU, and also focusing on a NASDAQ. So for example, NASDAQ has a little bit more consistent volatility. So NASDAQ will have a little bit more opportunities because when you're only focusing on one pair, the thing is, if that pair is low probability, then you're going to be stuck with that low probability pair. So that's what, for example, why I like a filtering process. Now you don't have to focus on 20 pairs. You can also focus then, for example, on an EU, on a GU, and a New Zealand dollar, US dollar. So then you have a filtering process within those, if that makes sense. So understanding, okay, for sells, New Zealand dollar, US dollar is more interesting. For buys, I'm going to take a look at GU right there. So you're not dependent on one instrument being high probability all the time, if that makes sense. For indices, I would say that's a little bit less of a concern because the indices right there are already a higher probability because they have more consistent volatility, if that makes sense. But at the start, feel free to focus on one pair, master one pair, see how you're doing with it, get familiar with it, etc. Macro example. I don't use macros, my friend. I don't use macros. I think macros are very funny. I think if you rely on a specific time of day, only that specific time of day, your thing works, then there's probably something wrong. What is your last 10 trades outcome? I can check that for you, my friend. Let me see. Got confused there. Let me see. What do we have? Let me see. Took a winner, then took a break even, took a winner on gold. So this is my last trade outcomes. So that's winner, it's break even. That's a winner. That was for the month of June. So this month. For the month of May, it was the following. That is win, break even, win, win, win. Before that though, this is once I start figuring out how I really want to trade with my area of opportunity. This is where things changed quite drastically right there, in all honesty. In April, it was a little bit different. In April, it was, so a month of May was a really good month for me. Then in April, it was break even, loss, and then one winner. So it was an unprofitable month for me, the month of April right there. That's where I was really struggling. Then May was good, was good for me right there. And in April or June, I just started to pick up the pace again. Those are my last 3 months right there. Perfect, perfect. Love to see it, Emmanuel. Got first payout for the next trading, your sharp trade entry model. Love to see it. Love to see it. Hamza, check your bottom right. Your contract change right there. Well, nothing guaranteed, of course. So does running a rejection high guarantee a run higher? So I need you to understand nothing we do is guaranteed. So for example, on NASDAQ right here, once we start running this rejection high, it doesn't guarantee that we are now going to run towards the next target right there, but the probabilities are in our favor. So we can get closer to guaranteed by probabilities. So for example, we can understand, okay, well, there's an 80% probability that we might then reach towards the next target. So that gives us an edge in the market, if that makes sense. That's the important part. So nothing is guaranteed. It's not guaranteed that a two-candle rejection always holds. It's not guaranteed, for example, that we always run a high and we're going to run higher. That's important. I want the MMT next class. If that's the case, then I would highly advise go to tradingmmt.com, my friend. And if you do have any questions, feel free to let us know as well. Yeah, I do want to start teaching stocks. Actually, I want to dive into stocks. I really like stocks. I love stocks. So to sketch you an idea again, my first love in trading, how I got into trading was stocks. So I don't know, and I had a good experience with it. So I think that's also probably helps. And it's partly a reason why I like it. Why I like it a lot. So Roblox, for example, we've been in it very early, arguably here, right there, and here as well. Now, I've been dollar cost averaging my way into Roblox as well. So, for example, I believe I've bought around there, right there. That's not financial advice, by the way. Don't buy Roblox right here. Don't do it. Just talking to myself right now, not financial advice, please. That was very interesting. Very interesting. So one stock, I can't let this go, but one stock we talked about last year in the MMT was Palantir right here. So this was absolutely beautiful. This has been absolutely insane. I think we talked about it around this time right here. And I believe it's been up some 700%. Beautiful. Crypto guys probably will laugh at me. Will say, oh, 700%. There's nothing. I don't know. Crypto is not my domain. I like stocks more. I prefer stocks. Thoughts on trading geometry? No idea, to be honest. I'm not sure what that is. Not sure what that is. Yeah, Tesla. We also took a look at Tesla last year, but to be honest, at this moment in time, Tesla is not that interesting anymore. Right there. So here we saw, we even did a live session, by the way, on YouTube on this. But here we saw a dominoes effect right there to continue higher. There's an all-time high right there. After we do reach an all-time high, at this moment in time, not that interesting anymore. If we do start running this high, for example, that could be all right. Could be interesting right there, but not my favorite. Let's put it that way. No, I don't use any moving averages. No. Correct. All right. Thank you, everyone. Thank you everyone for today. Have a great weekend. The new episode of the YouTube series going to be online soon, I hope. And then afterwards, quite fast as well, we're going to talk about what is it? We're going to talk about different things. I want to take a little bit of a different approach. So, for example, I think I've talked about a lot of concepts already. I don't know about you, but I'm a little bit done with just sitting there and to this camera and talking about, hey, this is a toucan rejection. This is market structure. I want a little bit of a different approach, to be honest. For example, applying it live more, etc. But that's for the future as well. For example, diving into stocks a little bit more as well. It's interesting to me. All right. Thank you, everyone. Take care. And then I'll see everyone at the next one. All right. Thank you. Have a great rest of your weekend.